Welcome back, investors, to Ticker Time News. I'm Adam, and here's the latest segment from the After Hours show. Deere and Company, ticker symbol DE. They had a problem where workers were on strike, and I was concerned that their earnings would show a problem with revenue due to the strike. Now, they have come to an agreement with the UAW and the workers last week, so strike is no more. So Deere posted their Q4 21 results that beat analyst EPS expectations while also providing a bullish outlook for fiscal year 22. To say that it was a challenging quarter for the world's largest farming equipment maker would be an understatement. Not only did Deere contend with the widespread supply chain issues, semiconductor shortages, and rising costs, but 10,000 employees, representing about 14% of its global workforce, went on strike in mid-October. The combination of these items prevented the company from fully meeting demand, resulting in revenue of $10.28 billion, falling short of the $10.48 billion estimate. The healthy demand, though, is what investors are honing on today. In earnings press release, CEO John May commented that high crop prices, along with increased investments in infrastructure, should continue to support strong sales for farm and construction equipment. As a matter of fact, the used tractor market, or for farming equipment, is the hottest it has ever been. People are in bidding wars for used tractors and used farm equipment. It is an extremely hot market right now. Uh, like prices are, you go out and buy something used that you've used for 10 years, you can get your money back on it. Complete 100% money back on it because of the prices for used tractors right now. It is incredible. Now, Deere did signal or talk about the $1 trillion infrastructure bill on November 15th, which earmarks billions of dollars to upgrade roads, bridges, and transit systems. And it should be a boon for Deere construction and forestry segment. With prices of soybean, wheat, and corn rising sharply higher, farmers have more income available to spend on new and upgraded equipment. This dynamic is enabling Deere to raise its prices as well, which is lifting margins higher. For instance, the operating margin for its production and precision agriculture segment expanded to 16.7% from 15.2% in the year earlier period, despite higher raw material and production costs. In a similar fashion, the small agriculture and turf business saw operating margins improve to 12.3% from 11.8%, coming from an fiscal year 2021 in which each of Deere's main equipment segments generated sales growth of 27%. The company is anticipating solid growth across the board, again in fiscal year 2022. Now, if we look on the chart, again, this is a daily, and we look at the year 2021, it doesn't look like much because it went flat during the summer, right? And we go down here and look, they're up 36% year to date. So it's not a big, hefty mover, but it can move if we go back and look from 2019, which is over here above my head on the left side of the screen. You can see where their stock price was, like $160 to $180, and now it's up here in the $368 or so range. So it can move when it has the growth. Last year, it had the growth. This year, it stalled a bit. In 2022, I believe it'll have the growth again. Now, for Deere, it is forecasting Net sales growth of 20 to 25% for production and precision agriculture, 15 to 20% for small agriculture and turf, and 10 to 15% for construction and forestry. The main challenge will be whether the company can continue to drive margins upward in the face of stiff cost-related headwinds. Deere's new labor agreement calls for significant increases in wages and incentives, including an 8,500 or $8,500 signing bonus, a 20% jump in salary over the lifetime of the contract, and cost of living adjustments. Now, these are all good things for workers. Don't get me wrong, I'm not complaining about that. These pay hikes are an addition to steeper raw material prices and shipping rates. So we just have to keep all this in mind. The company is projecting positive, price realizations ranging from 7 to 9% across its equipment in fiscal year 2022, which will help to offset the cost pressures. Another positive factor is that Deere's more advanced precision agriculture equipment accounts for a larger percentage of total revenue, 41% in Q4 revenue. Now, their precision agriculture, that's where the autonomous driving tractors go out in the field, work all day, work all night without a human intervening. That is incredible. That's where farming is going in the future, and Deere is leading that move. Now, they are providing a favorable sales mix that skews towards higher margin equipment. Our main takeaway, all right, is that investors are giving Deere a pass on the top line miss as the strike weighed on sales, and are understandably focused on the company's bullish outlook instead. The year ahead does indeed look bright due to the healthy farming industry, but supply chain disruptions remain a persistent issue that does threaten to impede Deere's performance. Now, I say Deere will outperform. Now, that's my thoughts on Deere and Company and the stock. I think it flattened out this year for the most part, but the growth that we saw from 2019, skip the pandemic, this growth in the second half of the year, that was all due to John Deere performing. And I think John Deere will continue to perform. This is not going to be any type of big moving stock, though. It'll be a slow mover, a couple of percents here or there every day, but they will add up over time. And I do believe when I say outperform, that means they will outperform the S&P 500. Thank you for watching this segment from the After Hours Show. If you want to watch it live, then join me on this channel every day the market is open around 5 p.m. for the latest stock market news, deep dives on your favorite ticker symbols, and most importantly, answer your questions. Make sure to click the like button and share this video with others so we can all reach financial freedom. Thank you so very much for watching, and I will see you in the next video.